Excellent. Thank you, and welcome everybody. I'm really happy to be here with all of you today. I have a very brief presentation. Actually, I'm going to spend very little time on my PowerPoint slides today, but we are going to spend most of the time on my live charting platform and going through several charts, various examples. This is a trade that myself and the other traders here at TradingWins have been using for many years, and it continues to be very consistent. But before we get into that, a bit about us here at TradingWins. We're a group of pro traders with well over 30 years of experience. We're actually real traders and teachers, and we've been developing our own strategies and trading systems and teaching people around the globe from complete beginners to experts. Now today, I'm going to start by sharing the money management rules that myself and the other traders here use on a daily basis. Then I'm going to talk a bit about what you will need to trade this system, okay? And I'm going to show you the actual trade setup today. Then we are going to switch to my live charting platform, and at this part of the presentation, if you have a favorite symbol you like to trade, or something that you're in right now, at this time I'm going to ask you to type in a symbol in the chat room, and we can review several charts together, okay? And then we should have plenty of time for Q&A at the end as well. Now, before getting into this, I did want to put up a couple of poll questions just to make sure I understand who my audience is today, and that way I can tailor my examples to you specifically, okay? So first off, which market do you trade most? Is it stocks, options, futures, or Forex? If you could please take a few seconds and type that in, I'd really appreciate it. Excellent. So I see there's quite a few. Well, we've got FX as well, futures, plenty of options. Fantastic. Thanks for answering that. Just one more poll question for you, and then we'll get into, on with this. On average, how many trades do you place per month? Is it 1 to 10, 11 to 20, or are you very active, 51 to 100, 100 plus? Again, please take a few seconds to answer that. Wow, 200 plus, even lots of very active traders here, 400. Thank you for taking the time and answering that. Excellent. I think you're really going to like what you see today. It's very simple, but very effective. Now, a bit of the legal stuff first. As always, you should never trade with money you can't afford to lose. Do not risk your mortgage money or your kids' tuition. Trading can be very risky if you don't know what you're doing. So what this presentation is all about is teaching you exactly how to do this and limit your risk considerably. So let's get started. Let's start off with the money management rules that myself and the traders here at TradingWins have been using and continue to use daily. Now, the first one you've heard many times, you just heard me say it again: do not trade with money you can't afford to lose. You know, you've probably heard this so many times that you just automatically ignore it, but you never should. It's crucial. Also, trade with an amount that is small enough, okay, that it feels completely insignificant to you. Now, for most of you, or some of you, it may be just, you know, a couple of $100. Others, it'll be several thousand. The amount does not matter. It needs to be insignificant to you. If you've been trading for any period of time, I'm sure you've come to notice that it is much more important how you manage a trade once you're in it than it is selecting the entry, okay? And although the entry with this system is very good, I'll explain more about why it's so important, how you manage this trade once you're in it. Now, you should never risk more than 5% of your account balance in any one trade. And if you have a larger account, you really should reduce that to 2.5% or even 2%. That way, you'll still have a very sizable trade on, but you will really limit your risk. Also, never have more than 50% of your account balance active in the market at any one time. Now, some of you may be thinking, wow, I'm going to leave half my account just sitting there earning nothing. But if you think about it, there is so much when it comes to the markets that is completely out of our control, okay? And any major news announcement or some catastrophic event can really make the markets drop in a hurry and really hurt you. So the best example I can give you is thinking back to 9/11. If you recall, on the day of the attacks happened before the markets opened. So the markets never did open, and in fact, they remained closed the balance of that week. When they opened the following Monday, they were at half the value they were previously. So if you had your full account invested in there, you would have taken a very sizable loss. Now, this rule is for two reasons. Number one is to limit your exposure ahead of time, but also once, and if you do take a loss such as that, you then have capital still there to trade with and make back those losses. And with what I'm about to show you, it really wouldn't take you long. And if you recall, about 6 months after the 9/11 attacks, the markets were right back at the highs they were before the attack. So it really would not take very long to make that back. Lastly, never place more than 2 trades per day. Now, the examples I'm going to show you today are on daily charts, okay? But the point of this rule is that during times of increased volatility in the markets, as we've seen in the past month or so, there will be days when the markets are up strongly or down strongly. For example, the Dow will be up 300 points, S&P up 30, etc. So on nights like that, you will find several setups to the long side, okay? But if you go in, you jump in, you put on 10 trades all at once, and the very next day the market retraces, then again, you're starting off at a big hole. So what you want to do is spread your trades out, okay, to reduce your risk. Now, there will be plenty of setups with this system, so there'll be plenty to choose from. Be picky, select the 1 or 2 best per your time period, okay? Now, a couple other rules or goals we have here that we follow. Number one, you will never go broke taking profits. And this is even more important if you're just starting out. Get used to banking those profits. And with experience, you'll be able to stay in the trade a little longer as you go and eventually grab the majority of the profit in that trade. Okay? But especially if you're just starting out, get used to banking those profits. And remember, when you sit down to trade, leave your ego at the door. It's never whether you're right or wrong that's important, but it's all about how much money you make when you're right versus how much money you lose when you're wrong. Okay? So what will you need to trade this system? Number one, any charting platform will do. Okay, you don't need any expensive software. Even the free platforms out there are perfectly fine. Reason being, you will be plotting only one indicator on your chart, and that is the 20-period simple moving average. Okay, that's it. And I've yet to see a platform that does not have that. And now, even this is more of a visual aid than anything. You don't even need it, but I'll explain more in a moment. So again, there is no need to spend money on new hardware or complicated charting software. If you're watching this webinar, you already have everything you need. Okay? So a few benefits of this system. Number one, it works on any market, okay, globally, and any time frame. So stocks, options, futures, forex, whether you're trading on a daily chart, weekly chart, or intraday, the 1 hour, the 4 hour, the 15-minute, all work very, very well. You don't need a lot of experience. What I'm going to show you today is the basic strategy, and you'll see just how easy it is. Now, it is very, very easy to spot on a chart. In less than 30 seconds, you'll be able to see this. It has very clear entry and exit points, okay? And it can be used as a standalone strategy or as a great complement to whatever you're using right now, okay? So, the strategy itself. Now, let me give you a bit of background before I actually show you this to you. When we first sat down to put this together, there were a few things, 5 main things that we felt we could not live without, that we had to accomplish. So number one, it had to be very simple to spot on a chart. Number 2, could be used with any charting platform. We did not want to restrict anybody. Also, had to be easy enough to be used by any level of trader or investor. More importantly, it had to have extremely low risk, and you're going to see just how low it is. And most importantly, like any other system, it had to be consistently profitable, and we've proven that. So the components of this strategy, very simple. Number 1, 20-period simple moving average. Again, more of a visual aid, but I'll demonstrate that in a moment. Number 2, engulfing candlestick pattern. This is what we're going to be looking for, okay? I'll explain again in a moment. Now, for those of you just starting out who might not be familiar with these, let me just explain. A simple moving average is calculated by adding the closing price of the security for a number of time periods and then dividing this total by the number of time periods, just a straight average. The engulfing pattern is a reversal pattern that can be bearish or bullish depending on whether it appears at the end of the downtrend, which would be a bullish engulfing pattern, or at the end of an uptrend, which would be a bearish engulfing pattern. Now, this picture here probably won't do it justice, so let me switch to my charting platform, my live charts, and I will draw this out for you. Okay, give me a second to switch over. So hopefully everyone can see my charts. Great. Let me just take a sip of my coffee here. Okay, so when it comes to this setup, there's a couple of things we look for first. 1 is trend, and 2 is momentum, and this is how we read this. Okay? We look at the slope of the price bars, or that 20-period simple moving average, and this is where that visual aid comes in. Okay, for the slope, which we interpret as momentum. So in other words, you can have slight momentum in your favor, you can have more significant momentum in your favor, or you can have very significant momentum in your favor. Okay? And the same goes for a downtrend. Slight momentum downward, even better momentum downward, or very, very strong momentum downward. So the more significant that slope, the better. The more momentum there is there for you. It's like a wind at the back of the price bars, okay? Propelling them forward. So let me clear this and show you exactly what we're looking for. Now, there's a difference between the setup and the trigger. First, I'm going to explain the setup. What you're looking for is significant momentum to the upside. Then a retracement or consolidation, okay? And then it's in this area where you're looking for some type of reversal pattern to tell you that this retracement is over and that the move to the upside is going to continue. So it is in that area that we're looking for, in this case, since we're talking about an uptrend or a long trade, a bullish engulfing pattern. And this is what it will look like. There'll be a candle such as this, followed by a candle with a much larger body. So when we're talking about the setup, the wicks, okay, or the tails here on the bars, the candles, do not matter. We don't even look at those. All we're looking at is the actual bodies, okay? The open and the close is what we're looking for. So the engulfing bar must completely engulf, or the body of that bar must completely engulf the body of the previous bar, okay? And this tells us that this retracement is over and that the move will continue. The same is true for a downtrend. We are looking for a significant momentum to the downside. The more significant, the better. Then looking for a retracement or consolidation. And then it is in this area that we're looking for a bearish engulfing pattern to tell us that that retracement is over and that the move is going to continue. Now the bearish engulfing setup looks identical to the bullish engulfing setup, okay? The body of the engulfing bar must completely engulf the body of the previous bar, okay? So that is the setup. Now the trigger does involve the wicks and the candles, Because for the long trigger here, what we'd be looking for is a trade above the absolute high of the engulfing bar. So including the wick or the candle, if there was a wick up here, a trade above the high of that bar would trigger us into the trade. And if we go along there, the stop loss would go just below the low of that same candle, so that the risk you're taking is never more than the range of that one candle. Okay? Same goes for the short trade. Once you have this bearish engulfing pattern, you're looking for a trade below the absolute low of the engulfing bar to get you in. If you go short, your stop goes just above the high of that same engulfing bar. That way you only risk the one candle. So let me remove these and let's run through some examples. So here's a chart of the Qs, okay, the QQQ. And again, what are you looking for? You're looking for trend and momentum. Now, how do you measure that momentum? By the slope. So look at the bars here. If I draw it over the bars, okay, that's a very significant slope. That's exactly what you're looking for. But the 20-period moving average automatically draws that in for you. Okay. Now, here is the benefit of the moving average. You see how we have a significant slope higher, and then we have a retracement or consolidation back into the 20 here. Okay. Now, if you didn't have the 20 on, you might mistakenly interpret this retracement as a new downtrend, because sometimes the slope on that retracement can be significant, okay? As where you can see that the 20 period never does change direction here, okay, or slope. So this will help you identify the fact that this is merely a retracement and not a new trend direction, okay? So once it pulls back here, then you're looking for that reversal sign, okay? In this case, a bullish engulfing pattern, and it is right in this area. I'm going to zoom in a moment so you can see it clearer. There it is. Okay. Again, you need the body of the engulfing bar to completely engulf the body of the candle to the left. The wicks do not matter. Okay. That's the trade setup. The trigger would be a trade above the absolute high of the engulfing bar. Okay. You get that on the very next day here, second day. Okay. And then once you're long, your stop goes just below the low of this bar. Okay. So two other things to note here. Number one is for a long trade, okay, you always want the bullish engulfing bar here to be green. The reason being is the closer it closes near its highs, the stronger the trade setup, okay? So now the color of the candle before that doesn't matter. This could have been green on green. It really didn't matter, okay? But it's this bar that should close near its highs. That is important. And second thing to note is, as I run through these examples, what you're going to notice is that most trades tend to move in our favor immediately. And that is because of the momentum on our side. That's why you want as much slope in the bars here as possible. Okay, the higher the slope, the more momentum, which propels us forward. Now, this is extremely important. Number one, when a trade moves in your favor right away, it's so much easier to manage. There's so much less to worry about. You're in profit immediately. You're able to remain calm, follow your rules, and manage that trade very easily. And especially as a new trader, that is not only going to give you confidence in your system, but it'll give you a lot of confidence in yourself as a trader, which is huge. Now, I noticed when I asked those poll questions that many of you prefer to trade options. Well, as an option trader, this is huge, because as you know, if you were to get into this trade and it retraces on you immediately, then that premium decay in the options, for you to make that back, you're going to need a much bigger move to not only get back to break even, but actually squeeze out a profit. But when it goes your way immediately, even with out of the money options, you're making money right away. So it's crucial. Okay? So let's have a look at now a short trade example. And I'm using a chart of CA here for more than one reason. The other thing I wanted to point out to everyone is that when you do get a significant trend in one way or another, you tend to get multiple setups along that same stretch. So even if you were to miss one, a few days later you'll get another one. So here's a chart of CA, and you can see that we were pretty much chopping sideways here for a while, and then things started to roll over. Now, this first trade here, many of you might not have taken this for a couple of reasons. Number one, the slope here on the moving average. Oops, let me just get the right drawing tool. There we go. The slope here on the moving average was not very significant at the time. If you looked at the bars themselves, they were. Okay, that's why it's important to look at the bars as well. But once we retraced back here, and we got this reversal signal, being the bearish engulfing bar here, you can see how long that bar is. Now it closed very close to its lows, which is very important. But remember, you assess the risk on your trade by the range of that one bar. So the longer that bar, the more risk you will have, because remember, you enter short down here, but your stop goes just above the high of that bar. So if you consider that too much risk, then don't take it. Remember, there's going to be plenty of trade setups like this on a regular basis. But more importantly, when you do have that significant momentum on your side, typically there's multiple setups along the way. So in fact, about a week and a half later, here we had another pullback and another engulfing setup. You wait for a trade just below the low, the absolute low of that engulfing bar, to go short. And once you're in, you put your stop just above the high of that. So on the smaller candles such as this, it's even better because your risk is lower. And again, notice it moves in your direction immediately. Does not go straight down all the time. Now, of course, there's going to be zigzags, but then it just becomes a matter of managing this trade. And again, a couple weeks later, we got another setup here. Okay, that moved in our favor right away. So you'll see just how well this works. Let's have a look at a chart of Baidu. This is a favorite of many traders. Again, what are we looking for? We're looking for that slope, either in the 20 or in the price bars. Okay, and we're looking for orderly retracement back to the 20. And it doesn't even have to remain above the 20. These bars can move below the 20. Okay, it's just that when they do, you want to make sure that the slope of the 20 period moving average is still intact. If the 20 begins to flatten out because the bars have gone too far below the 20, then you've lost momentum and you want to move on, okay, and not take that trade. But here we did have that momentum intact. We got a nice pullback, and right in here, I'll zoom in for you, okay, is a bullish engulfing bar. Remember, it's the body of this candle. It needs to completely engulf the body of that candle. But then for the actual trigger, you're looking for a trade above the absolute high of that engulfing bar. Okay? And your stop will go just below the low of that bar. Again, if you look at the size of that bar, your risk compared to your potential reward, which in this case was huge. I mean, we did have an earnings gap in there, but even before earnings, we were up very nicely on this trade. In fact, your entry on this trade, if I look at the high of the engulfing bar, was 178.92. So call it 179. Okay, it immediately went as high as 190, almost 194. Okay, immediately with no pullback at all. But before earnings, it was as high as 205.50. Okay, so you could have easily gotten out before earnings with a very, very nice profit there. Now here's BITA Holdings, BITA. Again, remember what I showed you earlier. Along a a sustained trend, okay, or period of momentum, you usually get multiple setups. And again here, after a period of sideways consolidation, we start getting the slope higher. Now, even if you want to only take the trades with very significant momentum, okay, and you don't consider this significant momentum, you could have passed on this trade and then the next one you can see has a much greater slope to it. You measure the bars. But again, what does it take? It takes a nice orderly retracement back, and then a nice strong bullish engulfing pattern. And look what happens next. Okay, there it goes. I mean, how difficult would it be to manage that trade straight up, right? See this one here, the one before it actually dipped below the 20. It doesn't matter. What matters is that the slope is still intact. Okay. Now, here's one more, LUV. Again, this type of stock is fantastic to trade with this system. When you get something that's been in an uptrend all year long, like this, okay, then all you're doing is sitting back waiting for pullbacks and for a nice reversal signal here to take you higher. So in fact, in here, if I zoom in, okay, we not only had an bullish engulfing pattern, because remember, it's only the bodies that matter on the setup, but we also had a hammer candle, okay, double confirmation that this was going in our direction, and it was a beautiful trade. We went from, let's see, the high of the engulfing bar was 28.30, went as high as 35.49. Now, don't expect to get the exact top. None of us know exactly where this is going to turn around. But along the way here, there were plenty of opportunities to take profit. Now, one point I haven't covered yet, that's probably one of the more important points of this system, is the fact that most trades that don't work out in your favor are not losers. They're actually just negated or disqualified trades. So let me show you an example. Here on Visa, if we focus on this area here, okay, this is a period where after this drop on earnings, okay, you had a very significant slope lower. If you measure the price bars, it's even greater slope, okay? Then you had a nice orderly retracement, and it's right in here that you get a nice bearish engulfing bar or setup, okay? So what we were looking for here is a trade just below the absolute low of that candle to go short. If we had gotten that, our stop would go just above the high of that candle. But because this traded above the high first, the trade is negated, okay, or disqualified, and we move on and look for another trade. So the trades that don't, excuse me, work out, the majority of them are not even losers. They're just disqualified, okay? And again, the reason we have that rule in here is because if we were to trade above the high of that candle first, then obviously the momentum is not as strong as we thought, okay? And it works same for long trades. Should you get a long setup and it trades below the low of that candle first, before the high, then it's negated. So most recently on Visa, right here, here's a beautiful trade. Look at the slope here, okay? Again, partly because of the gap on earnings, but look at the follow through after earnings on this trade, right? Straight up. Then a nice orderly retracement, and right here along the 20, you get a very, very strong bullish engulfing bar. And what happens, it immediately goes in our favor, okay? So if you had taken this trade, you'd still be in it. And in fact, the high of the engulfing bar was 256.56, and it is currently at 258, okay? So, but again, if we had gotten a trade below the low of this bar first, then this trade would have been negated, okay? Now, I noticed there were several of you who prefer to trade futures. Let's have a look at some futures. Right in here, okay, what do you have? If you measure the slope of these bars lower, you have a significant slope lower, okay? But look at the 20. This is why we use the 20, okay? It's a great visual aid that is very accurate. So, and some of you may be asking, why the 20, why not the 21 or the 50, etc. You can use whatever you want, but what we found over many, many years of testing this is that the 20 works best, and that's probably because it's the most popular moving average with not only professionals, but most retail traders as well. So it's so widely used that it seems to perform the best. So back in here, if I zoom in, and this is gold, okay, we have that slope, we get a pullback, and right here we get a nice bearish engulfing setup, which actually, this might be a hammer candle, not perfectly, but again, there's your trigger. So, I mean, that's your setup. Your trigger, you wait for a trade just below the low of that candle. Once we got that here, we're in short. Our stop goes just above the high, and off it goes. Okay. Here's a chart of crude. Now, if any of you have been following crude lately, it's gotten absolutely annihilated. And actually today, it's in a lot of pain again, right there. But look at this. This would have caught the majority of this move. Look at after this nice move higher by crude. Look at the slope here that we're faced with. Okay, and if you measure it with the bars, it's even more significant. Okay, so what do we see right in here? A nice bearish engulfing setup. We wait for a trade below the low, which we got the very next day. Stop goes above the high, and off it goes. Okay, and so along here, there are many opportunities to either scale out, take some profits, okay, trail your stop, however you want to manage this. Okay, we'll talk about exits and order management in a little while. But look at the slope, and as it goes through, again, while you're in this trade, you should always pay attention to the slope. Look at this portion. Was there any reason to get out of this at this point? I mean, it's insane. Fantastic, fantastic trade. Then along the way, more recently here, after a 2-day pause, we got another bearish engulfing pattern. And again, it moved in our favor, still working out very, very well. For you Forex traders, here's a chart of the Aussie Czech Corona. Again, during a sustained uptrend, okay, where you have momentum on your side, multiple setups. Again, what do you notice? Tends to move in your favor almost immediately. Okay. Here is New Zealand US dollar. Again, this one here, you could say there wasn't much momentum to the upside. Okay. So this was one that maybe you skip. Okay. On a night where, or any day as you're going through trades, if you have 3 different bullish setups, for example, this might not be the strongest. Right? If you have one with more significant momentum on your side, you choose to trade that one over this one. But I want to show you just how well this works. It worked very well, regardless of that slope. And here, where we did have much more significant momentum on our side, right there, okay, you get a 2-day pullback. There is your bearish engulfing setup. It triggers the very next day, and this thing just takes a bath, right? So it's exactly what you want to see. So now, not every trade is going to be a winner. I've shown you a lot of winners here, okay, and I've shown you how to disqualify trades. They're not all going to be winners, but the majority of them should be. So at this point, if you want to throw out a symbol that you want me to look at, I can pull it up on the chart and show you exactly how well it would have worked on that symbol. So I'm going to actually bring in our coaching coordinator here, Raul, to help me read through the symbols. And any questions, if you have questions at this time, feel free to type them into your chat. And as we go through the charts, we'll start answering some questions. Raul?
Vince, always a pleasure to see you.
Great.
Thanks for having me here. Greg wants to know about Google.
Google, let's have a look at Google. So Google, you can see here back and forth, but some really nice strong trends here, okay, with momentum on our side. And there are a number of places to enter here, okay. I can immediately spot several bearish engulfing setups here. Now the first one here, we didn't really have momentum on our side yet, so you might have wanted to skip that. This one here was fantastic, except that would have most likely been way too much risk for most people. You can see the length of that bar there, okay? But the setup was there. It did trigger the next day. Stop would have been up here, and you can see how well it would have done regardless. But again, that's a lot of risk there. There was another setup right over here, okay, just a couple days later, okay. They're all over the place, all right. Let's see if we can see anything recently on Google. Not just yet, but now we're getting actually that pullback, and you can see the 20 here has started to roll over, because if we look at the slope on the bars, which is very important here, right there, okay, significant slope lower. Now you can start to see that in the 20, okay? So we're waiting for some type of reversal signal here. So this is when you want to put on your charts, because you may get a signal soon. We don't have it yet, but you may get it soon.
Juan wants to know about Salix Pharmaceuticals, SLXP.
Let's have a look. Salix. Okay, let's see. So quickly running through here. Let's see if I can spot anything. The odd time you will get actually a stock that does not have a pattern, but again, there are actually more than just the one type of pattern you can look for, and I will touch on that in a little while. But you can see here, let me get my other drawing tool, right here, you did have a slope. And see, this is why I want you to measure not just the 20, but the bars themselves on that move. You see that? The bars here were telling you that there was much more momentum on this side than the 20 was showing, even though there was a nice decent slope. And here, you get a very nice orderly pullback, okay? Here. And then right in here is your bullish engulfing pattern that took off right away. Let's see if there's anything recently. No, I don't see anything recently, although this momentum lower is still intact, very much intact. So you might want to keep an eye for a reversal signal up in here.
John's got a question. He's asking, do you watch for a minimum number of bars to trade to measure the slope before the retracement?
No, generally you'll need at least 5 to 10 bars, which would be safe, but you don't really need it. As long as that momentum is on your side, that is best. Of course, once you're in a sustained trend, okay, and you've got maybe 20, 30 bars in place and you get one, then it's even stronger, right? In fact, actually, is there one right up in here? I believe there might be one. Let me zoom in here. Let's see, let's measure these bars. The close, 96.27, open, 96.20. Yeah, so right in here was another one that worked out on this. Let me draw it for you. Oh, the other thing I wanted to mention, I don't think I've mentioned it yet, is even if the bodies here were at the exact same level, same price level on one end, that's okay, okay? That works as well. But you can see here, okay, you had plenty of bars here during this upslope, and then you got a retracement, and off you go. So the longer that trend is in place, obviously the better. But if you've had 2 or 3 trades along the way here, you know this isn't going to continue forever. So after 3 setups along the same stretch, okay, you want to be a little more cautious.
Vince, we've done the session a few times now.
Yes.
And the question that's the most popular today, I've never had this as the most popular question. Okay. People want to know about the disqualifying criteria again. So Michael's asking, can you please show us how to disqualify a bullish engulfing candle? And Joseph's asking if you can just repeat the disqualifying criteria in general.
Okay. So I'm actually going to cover in a couple different ways. Number one, here, let's use this example here for a bullish trade. This is a clear example here. So what we're looking for once we get the setup for the trigger is a trade above the absolute high of the bullish engulfing candle, okay, the green candle here, which includes the wick. Okay, so a trade above the absolute high triggers us into the trade. Once you get that, your stop goes just below the low of that candle. But in this case, that's exactly what happened. Okay, it moved above there in the very next day. But should this candle here, the next candle, have breached the low here first, then the trade was automatically disqualified. So I'm even going to draw something out for you. Let's say that this candle here, okay, was like this. Okay, so, and I'm going to remove that color there just so we can, there. So let's say it was that, like that. So in other words, it starts today and it moves below the low first and then comes back and closes above the high. For me, that's still disqualified, okay? You need a trade above the high first for a bullish trade to get you in the trade. And it's the same in the, for short trades, it's the opposite. You need a trade below the low first to get you in. If it trades above the high of the bearish engulfing bar first, then the trade is disqualified, okay? Now, let me zoom out here and show you something. Sorry, let me just go back here. There we go. So if you look in this area here, there was actually another bullish engulfing pattern here. But why would we have not taken this trade? Okay, reason being is look at the slope on the 20 at this point. It had flattened out completely. Okay, so sometimes when the pullback pulls too far below that 20, or the stock just loses steam and starts consolidating sideways, you lose that momentum. Okay, so if that's the case, that will disqualify it as well. Okay, you must still have that slope in the 20 at the time that the setup happens. All right, so
all right, what's always the most popular symbol that we do?
Apple.
Right,
Always.
so Lee wants to know about Apple.
Let's have a look at Apple. Okay, so Apple, fantastic one to trade in. I mean, actually, sorry, I was using this in a previous webinar for a different kind of setup. But look at Apple here. In this area, there's one. And if you want to go further, more recently here, can you see it? This is a perfect example. Okay? Look at the slope on the bars here. Okay? Then what happens? You get consolidation sideways. And it's right in there, right in here, that you get a nice bullish engulfing setup. Okay? Zoom in for you. Right there. So the body of the engulfing bar completely engulfs the body of the previous bar. What do you need? Trade above the absolute high of this bar to get you in, which we did. If you had traded below the low first, it would have been disqualified. In this case, we get in. Our stop goes right below this bar, which if you look at the range of that bar, okay, very, very low risk. I mean, let's work this out. You have a high of 109.75 and a low of 108.71. Okay, so $1, what is that? $1.04 risk. Okay, on your trade for what? Oh, a potential profit. If you got in here, it would have been just above 109.75, and we're at 119.75. A $10 move in a very short period of time on a $1 of risk. So that's the beauty of this. Not only do you have trend and momentum in your favor, which when you're trading with trend and momentum, you've won half the battle before you even get in the trade. Okay? But once you're in it, if you follow these rules, when you're only risking $1 to make a potential of 10 or more, it's significant.
Vince, we're going to do one more. I can keep you busy probably till about 5 Eastern.
No problem.
But I know you've got a...
I want to summarize what we've gone through.
All right. Carboceramics, CRR.
CRR. Let's have a look. Okay, so here's CRR. And again, there was one in here. Let me make sure I have the right tool there. There was one in here. Now this one, there wasn't much slope in our favor here yet. Okay. As we go through it, again, there was one in here with enough slope there, or more recently, during this period here, there was one right in here. Okay. Now, this one's a little questionable. it would have turned out to be a fantastic trade. But this is another great example, and what I'm talking about is the risk, okay? So let's say you were watching this. So you're watching CRR, and you're looking at this slope, okay? And this should get you very excited because all you're waiting for is a retracement or consolidation and then a trigger in. So you're waiting, but when you got this steep drop, then you started consolidating. And it took a little longer than usual, and the 20 started to turn a little, okay? Started to flatten out a little. Then finally in here, you get your bearish engulfing setup, okay? So if you were questioning this trade at the time, wondering, should I take it, or has the 20 really flattened out? Number one, if you did skip it, no worries. There's plenty of other setups along the way, okay? Always take the safe way out. But again, from a risk perspective, what are you risking? Let's look at the range of this bearish engulfing bar. The high was 104.31. The low was 102.23. About $2 of risk, okay? $2 of risk on a stock that was $103 at the time is almost nothing. And if you're trading that with options where you say you have a delta of 20 or 25 or even 50, or even a 70 delta, you're risking less than the $2, right? So, and look at your potential reward. Look what happened to the stock afterwards. It came down, it literally was cut in half. It went from 103 to 49.75 here without any hesitation. I mean, would there have been any reason to get out of this? It's crazy. That would have been a fantastic trade. So, let me just wrap up, and then if we still have time, I'll come back and look at some more charts and actually I try to answer more of your questions. So I just want to summarize quickly what we went through today. What I've shown you is a system that will work on any market, be it stocks, options, futures, or Forex, and globally, any exchange, any time frame, any price level. You've seen just how easy it is to spot the setup on a chart, okay? Again, it can be used as a trading system on its own or a great complement to whatever else you're trading with. As you've seen, it tends to move in your favor immediately, which is really, really important. And majority of trades that don't work out are actually not losing trades. They're just negated trades. Okay. Now, believe it or not, there is a lot more to the system, and there are ways to make it much more powerful. Unfortunately, I don't have the time to show you everything today. Okay, but we do have our pro class coming up. Friday, December the 5th, 1 p.m. Eastern. It's a 2-hour class, and if that date or time doesn't work for you, no worries. The event will be recorded, but it's a class I will be teaching myself, and what I'm going to show you, what I'm going to add to the system to make it that much more powerful is a very unique way of adding support and resistance that through the years that we've tested this has actually increased the accuracy by well over 30%. Okay? There are 2 Fibonacci tools that I'm going to show you in detail that are not only going to help you with the entry criteria, but also with your exits. Okay? And I'm going to show you 4 additional trade setups that you can use with the same concept. In other words, when you have that trend and that momentum on your side, and you get that pullback with the momentum still in place, there are 4 additional setups aside from the engulfing pattern that you can look for that work just as well. That way you can really increase your activity level. And I notice some of you here were trading like 400 trades a month, 200 trades a month, so you'll love this. Also, the second half of this class, we will spend time doing a scan together, reviewing charts together to identify real-time trades setting up for that coming week. That way we get to all walk away with a list of trades that we can place to make money with. Okay, the link for this class is tradingwins.com/candle. Okay, and this is what you're going to get as soon as you sign up. You're going to get a recording of the previous pro class we did. That way you don't even have to wait till December the 5th. Okay, you can go on and watch this as many times as you want ahead of time. And the real benefit of this is you get to make a note of any questions you have and bring those with you to the live class. Regardless of the recording we send you, we're still going to save you a seat at the live class on December 5th. That will be recorded as well, by the way. And we're also going to throw in a 30-day membership to our pro service here at TradingWins. What the pro service consists of is we record videos every night from Sunday to Thursday, recapping the day's action in the markets, what happened, where we believe things are going next. We also highlight or review all our open positions, and we highlight new trades setting up. Now, here at TradingWins, our traders use many different systems, and on those videos, we not only highlight the trade setting up with this system, but also the other ones, okay? And we will also send you trade alerts whenever we ourselves are taking trades. So you can look over our shoulders, so to speak, to see what we're doing, okay? Now, all of this together is $691, but for anyone on this webinar today, it's just $97, okay? Again, the link is tradingwins.com/candle. Now, we do have to limit it to 25 people because most of these classes tend to go a lot longer. There's so much material to cover within the 2 hours, and with all the questions for us to answer, if we had more people, there's no way we can do it in that time allotment, okay? Again, the goal of that class is to teach you everything from start to beginning, the entries, the exits. I'm going to be covering 5 different exit strategies that we use with this system, including the one that myself and the other traders here use most often, okay, that's most effective. We're going to spend a lot of time on that. And we're also going to show you exactly how we would trade this with options. I notice there's many option traders on here. I'm going to show you exactly what type of expiry we look for, what type of delta we look for, which option strategies we use. All of that will be in the class. So really hope you can join us on that class. And if there's any questions, be happy to answer them for you now.
There's quite a few, Vince. We'll go through them quickly.
Great.
Payman wants to know, can you trade this in smaller time frames?
Yes, absolutely. Again, the intraday time frames work great. The 15-minute, the 1 hour, the 4 hour, they all work very well.
I want to say thank you to Tom, Jeffrey, and Larry for ordering. We've got your order. Looking forward to seeing you
Excellent,
on the class, at the class, on the 5th of December. Jerry wants to know, where do you take profits? What's your general rule for that? Can you talk about stop losses as well?
Well, I mean, I can tell you that what we encourage is that you scale out of a position and you trail your stop loss. And during the class, we're going to actually go through that in detail. Again, I'm going to cover 5 different exit strategies, but the one main one that we have been using for years that allows us to squeeze out the bulk of the profit in any trade.
Efren wants to know, is the only reversal signal you look for also an engulfing pattern?
No, again, during that class, I'm going to be showing you 4 other setups that you can use in addition to the engulfing pattern that work just as well.
You haven't talked a lot about volume. How much of that plays into your decision?
Again, if you prefer to trade with volume, you can certainly have that on your charts as well. It's never a problem. The reason we don't use it is because of that momentum. We know we have that momentum on our side anyway, so we don't really worry about volume. When we first started this strategy, we had a number of indicators on our charts, and we've pared it down and keep it very simple. We found simple is best.
What was that comment that you made about adding indicators to the charts until it looked like what? It looked like your daughter's room?
Yes, that's right. My 12-year-old daughter's room. It was a complete mess.
So one of the benefits of this strategy you had mentioned is that you can actually combine this with other systems.
Yes.
People trading with Bollinger Bands or taking money from things like that.
Again, it's just a matter of identifying that slope and looking for that reversal signal. So even though you have a different chart setup, you can still spot this. And trust me, as you flip through charts with this, you're going to get so good at it, you'll be able to spot it in no time.
Are you okay to do a couple more symbols?
Sure. Let me just bring up my charts again. There we go. What would you like to see?
Ken wants to know about this SPYs.
SPYs. Okay, so let's see. Now, if you're going to trade the SPYs, you might want to trade the SPX too, first of all, from an option perspective. You'll be spending a lot less in commissions. But there's one right in here. Let me make sure I have the right drawing tool. And again, during that class, we'll talk about options. There's one right here that would have worked out very nicely. And believe it or not, there's another one in here. It is not with one of those setups, but one of the other ones we use. There was one in here. Okay. And let's see if there was anything recently that we can quickly see. No, I don't see any recently. I mean, there was one right in here very recently. Okay. Oops. Sorry. Let me remove that. Let me zoom in to show you. You see this one right here? Okay. And this is the beauty of sometimes it's easy to ignore these smaller candles. Okay. It's easy to spot the big ones. You see right in here? Right. It's very easy to spot that. But sometimes we miss these. And these are the best ones to trade. Why? Because our risk, remember the risk is the range of that one bar. It's so limited. So limited. And you see the high of this bar here was 204.58. It's at its highs here at 207.80. So very nice profit in a very short period of time.
Manuel, Peter, Christine, welcome. Thank you for your order. Looking forward to seeing you on the 5th as well. Next symbol up, Vince.
Which one?
Carl wants to know about gold.
Gold. Okay, we showed gold earlier. Why don't we? I'm going to show it as well, but I'll also show the ETF for gold, because you can trade this with ETFs, stocks, options, futures. It really doesn't matter. And you can see that right in here.
You don't find the accuracy changing if you're trading futures versus the ETF?
No, not really. It just depends on your preference, really. And the options will vary, obviously, so if you're trading options. But you can see you had one there, you had one here to the downside. So look at these trades. Again, remember the real benefits here are the fact that it moves in your favor immediately. Okay? One thing I do want to point out, you see how here it triggered on a gap? Now, it wasn't a very big gap. But this you have to pay attention to, because if it was a large gap, your stop will still go below the low of that bar. So you then have to assess your risk from the top of that gap to the bottom of the engulfing bar. Okay.
If people want to give us a call by phone instead of by email, it's 1-888-574-2426. There are live people that work here. We're not just all androids like you, Vince. We can't just trade like robots. Can you do a symbol for me, please?
Sure.
BlackBerry.
BlackBerry.
You know my hurt and pain that I've felt with this stock over the last few years.
Yes. Now here's the great thing about this. Remember what I said, that if you suffer a significant loss that way, if you follow our money management rules, you can make that back fairly quickly. Well, here was a perfect example here recently on BlackBerry. Last December, you can see there was a very nice trigger right there. And again, look what happened. 1, 2, 3, 4 bars later, okay, it was a significant move higher. Now, it may not seem significant here. It was an $8 stock at the time, but it went to almost $11 a share in no time. So like a 30% move. And if you're trading with options or using, one of the repair strategies we use, you can make this back in no time. There was another bearish engulfing bar here, now a slightly bigger bar, okay? But you can see how well that worked out. Let's see if there's a few more. So, again, since we created this many, many years ago, we have back tested this and forward tested it with real money. It is very consistent. What else?
Peter had asked earlier about Amazon. I know it's one of the
Amazon, sure.
The monster stocks that you like to talk about often.
Amazon. Okay, so immediately jumps out at me right here. Amazon. There's one there. Okay, and now see here. Here's one of those examples. I'm going to focus right in here. Okay, right in here. You see, this was your initial bearish engulfing setup here. Okay, so now if this bar, by the looks of it, now I have to go back and check, but if it opened here and went higher first and eclipsed the high first, then that's disqualified, okay? But if you get a trade below the low first, okay, then you're in short and your stop goes just above the high, okay? Just to review the exit rules. But let's see if there's any others here along the way. Right in here. Yeah, no, there was this one recently, but this is a bit of a stretch. When it's too far away from the 20 like that, I don't generally like jumping in on them. I feel like I'm chasing rather than waiting for a pullback. So there was one here, but I would not have taken that one.
I want to welcome Joan and Tracy. Thank you for signing up.
Great.
Looking forward to seeing you. The industry's changed quite a bit. We have so many women that
I know.
sign up for these webinars.
I know, it's great to see. Many years ago, there was mostly men.
It was. It really was like that movie, The Wolf of Wall Street, wasn't it?
In more ways than one.
Monty wants to know about Pfizer.
Pfizer.
PFE.
Right. PFE, Pfizer. Okay, a bit more of a choppy stock, but let's have a look. There was one in here, but again, pretty wide range bar. Let's have a look. There's certainly one in here. Now, you see, I can spot these fairly quickly. I've been looking at charts for so long. Oh, well, this is interesting, isn't it? Heads up, everyone. That's today's candle right there. Let's have a look. So you definitely have the slope in place, right? You have a nice pullback. Here's your engulfing bar. Now, we haven't closed yet, okay? There's still time. I guess it's a little less than an hour to market close. So we have to make sure that the body of today's bar completely engulfs yesterday's body by the end of the market close. But if it would remain the way it is today, then this would be a valid setup. And what you're looking for is a trade just above the absolute high of that candle, right over there, okay? And if you get in, your stop would go just below the low, okay? So this is one you can walk away with today. It's a freebie. You can thank whoever it was.
Monty was fine.
Monty, thanks, Monty.
John wants to know about Campbell, CPB. While you're looking it up, I'm going to tell you a funny story. I have a buddy who works at Campbell, so I went to go see him for lunch one day. He said, let's go to the cafeteria. We had soup. Our whole lunch, I think, cost us 84 cents. We had soup, we had bread, and a drink.
Oops, wrong one. Hold on. There's a couple here. And again, another one that if it finishes the day like this, okay, there you go. Now remember, it's the absolute high of this that matters for the trigger. So when you're assessing your risk for that candle, don't assess it by the body, assess it from the absolute high and low, okay? But there's another setup. You could have been in this one a few days ago and you'd be doing quite well already. So again, you can see just how consistent it is. There was a setup back in here as well for a short side. One over here. And they're everywhere. That's why I'm saying you can be picky. You can pick the best of the best, okay? You don't have to jump in on every trade and try to force it. There'll be plenty of setups.
Gary wants to know about JKS.
JKS, okay. JKS, all right. So, again, your eyes should go immediately to the slope, right? Sorry, I mean they're different. Trying to. Here. So when you see this kind of slope, okay. Now I know this is looking at it after the fact, but many times as you're going through charts, you know, you'll see the slope. It'll just be at this level here, right? And you'll see that slope in place already. So then your focus switches to the engulfing setup, and I'm going to zoom in just so everyone can see it a little clearer here. Help me draw it in. There it is, right? And what happens? Off it goes. So that's pretty much it. It works really, really well.
Marlon's asking about Celgene.
Celgene. One of my favorites to trade, actually.
I know we've had this on our
For many,
watch list for
many different
quite some
setups.
time.
Yeah, no, it's fantastic.
What is it about some of these stocks that give you more triggers than others? I know Facebook is a popular one. We haven't talked about that one today, but
that's right.
What is it about these stocks that
I don't know.
Unique?
Some of them are just they're highly liquid. First of all, right? They have a lot of volume. They're heavily traded, and so it's just that much easier. But again, right in here is a very nice one on Celgene, and look what happens straight up. So yeah, there's some great opportunities. Look at recently. Look at recently. Okay, 3 days ago. So 3 days ago, call it the 108 level, and you're really at 112. So a $4 move in 3 days with options. There's plenty you can do with that.
Let's stay in that biotech space. Can we do Gilead as well?
Sure.
That was from Donald.
Yep. Again, you see what I mean here? Look at this sustained uptrend, right? That's what you're really looking for. So at any part along here, you would notice that and pay close attention to it. And what are we seeing here? And this is what the ones we love the most. Why? Look at the range on that bar. And I'm going to zoom in for you. But not only do we have all this momentum on our side, look at the risk we're taking. Next to nothing. I mean, let's look at this. High 93.38, low 92.51. That's less than $1, okay? That's about 80 cents max risk. And where did it go? So call it from the high of that, 93.40, let's call it. It went to a high of 110.64, okay? Now, are you going to get the absolute high? No, you're not, okay? Unless you have a crystal ball, which we know you don't. You're not going to get the high. But no matter what, whether you're trailing this, okay, or using any of the 5 exit strategies I'm showing you, you're going to get the bulk of this move. And I mean, for an 80-cent risk, even less with options, fantastic.
You know, a lot of people ask, how do you scan for these setups? When you're teaching them in that class on the 5th, what exactly are you looking for on these charts? Can you go tell me in 30 seconds what's the first thing that strikes you when you're going through
the first thing is the slope, is the momentum and the trend. That's the first thing I look for. As to how exactly I do my scan, during the second half of that class, I will show you. We're going to do one together. I'm going to show you the watch list that I maintain, but I'm also going to show you just how you can scan for it in general in a much quicker way.
We have some big money players in here asking about Priceline.
Priceline, great. One we call a monster stock, because it is, and it loves to move very quickly. Now, again, here, if you're a big player, and you don't have to be, because you can trade this with options.
So that brings up an interesting point. If you're using options for this, let's say you're just going long on a call.
Yeah.
What kind of time period are you looking at? What's your recommendation?
Again, there are many factors involved. So during that class, I'm going to tell you exactly what kind of expiration we'd be looking for in delta, etc. Okay, but there's too many for me to explain why I'm looking at that delta or whatever. I'd have to go into a lot more detail.
One of our members is asking if you can enlarge the area that you're looking at. It's a little bit hard to.
Right now, sure. Hopefully that's better. So the key here is this: the slope, right? That's the momentum on your side. Now you can see just how deep this retracement went. It went beyond the 20, and at that time the 20 started to flatten out. Okay, so you can ignore this trade because of that. That's the safest thing to do, and not cry over the missed profits, because there'll be plenty of other trades. Okay, or you can assess it by the risk. Here's your bearish engulfing pattern. You take the range of that bar, okay, and you can assess it. If it's a low enough risk for you to take, and again, you know, if it trades below the low of that bar first, you're in. Your stop goes just above the high of that bar, and off it goes. So that was a great one. An even better one was right in here. Oops, wrong drawing tool again. Always forget to switch over. There we go. right in there, and I'll zoom in on that for you. Okay. Again, tends to move in your favor immediately, making it very easy to manage the trade. Okay. So there, when you had to move from about 1158 down to 1017, just an incredible move, and that's the beauty of Priceline.
Ed looks like he likes to invest in airline stocks. Can you take a look at UAL?
UAL. Sure. Let's see. Well, thank you for this one. Here's another gift, everybody. If it closes the way it looks like it's going to close, there's an engulfing pattern today. Okay. Now again, when we have the class on December 5th, I'm going to show you what else you can add to this to really make sure you have a very high probability play, okay, with this, because you could have several setups, as we've seen today. What was the other one? PFE, I think?
Yes, Pfizer.
So Pfizer and UAL, and there was one more too. So between the three, there are really, there's a number of things you can do to differentiate between the three and determine which one of those is the highest probability play, and then trade that one. But UAL certainly has a pattern there, valid setup. Let's go back and see if there's anything. Now, this one might have been, might have not been. No, it doesn't look like it was. No. So
we've got about 5 minutes left in our time for today.
Okay.
Can we just bring up the details for the class for those of you that
Sure.
still want to join?
Absolutely.
And Payman was asking whether this works on futures.
Oh yeah, absolutely. I've shown you the gold chart, the crude oil chart. You can try it on any time frame, by the way. It'll work just as well. Again, the class is Friday, December the 5th, 1 p.m. to 3 p.m. Eastern. Typically goes, but if the time or the date doesn't work for you, the event will be recorded. A recording will be sent out to you shortly after the class is over. And I'm going to be showing you the full system from start to finish, entries, exits, and then I'm going to show you how to, add a unique way of using support and resistance to really increase that accuracy. I'm going to teach you the 2 Fibonacci tools that will help you with entries and exits. I'm going to show you 4 additional trade setups in addition to the engulfing pattern that should really keep you active with this. And again, remember, one of the most important parts of the class is we are going to be doing a scan together for real-time trade setting up next week. Now, it's TradingWins.com/candle, and when you sign up, this is what you're going to get. You're going to immediately get a recording of the previous class. Actually, Raul, when can we send that out?
That'll be sent out today.
Okay, it'll be sent out later today. So you can watch as many times as you want, start using this right away, or at least make note of the questions to bring to the live class. You'll then have a seat at the live class plus the recording, and you're going to get a 30-day membership to our pro service here, okay? And the first 30 days are free, and then it will renew automatically at 97, but if for whatever reason you'd rather not renew, just give our office a call, and we can stop that ahead of time. Total value is $691, but again, for you today, just $97. TradingWins.com/candle, and there are 25 seats, well, less now.
There are fewer now, as you can see, people are signing up. Ed says, I've attended Vince's class, and it's well worth it. He explains it all. I knew the name sounded familiar. I just wasn't sure. Welcome. Thank you for joining us today again. We really do appreciate you spending the time with us. It's 25 people. Why do you limit it to 25 again?
Again, we really want you to be able to walk away being able to use this immediately and actually trade it like a pro. So we go through a lot of material, and for us to cover the full system, plus adding everything else like the Fibonacci's and support and resistance, but covering all the exit strategies and showing you how we trade this with options. It takes time, okay? We want to do that scan together to come up with trades, and so that's why we typically go to almost the 3-hour mark as it is. But the real key is we want to be able to answer all your questions. We don't want anyone walking away with unanswered questions. So we do need to limit it, unfortunately.
How much of the discussion during that class is options related?
It's not a very long segment, and we don't go into any of the complicated strategies like iron condors or credit spreads, etc. At least not the explanation of it. I will tell you at what point we might use one of those strategies, but I don't. For anyone who's not familiar with it, I won't cover those in detail because of the time restriction. But I will cover the basics you need. You know, how far out do you go with an expiry date? What kind of delta do you look for? This is a credit spread or that sort of thing. That will be covered.
Folks, if you haven't attended one of Vince's sessions in the past, it's well worth it. It's only $97, and you get all of what you see on your screen there, the recording, the live attendance at the class, a month of membership. It's tradingwins.com/candle. tradingwins.com/candle. If you want to call us, it's 1-888-574-2426. I see that our time is almost up.
Yep.
I want to say a special thanks to Yana and the rest of the group at Trading Pub for allowing us to be a part of this wonderful, wonderful session. Thank you so much for that, Vince. I'll let you have the last word.
Yeah, same thing. Thank you to everyone over at Trading Pub, and thanks to all of you who attended today. I know your time is valuable. Hopefully you did find some value out of this. Thanks for spending the time with us, and I really hope to see you at our class on December 5th. And so with that, I will turn it over back to our host.
Well, I tell you what, Vince, thank you so much for that terrific explanation and demonstration on how you use your strategies for identifying nice trending opportunities in the markets. I really appreciate the time that you took to put together this presentation and to also deliver it, because I know that we all enjoyed it significantly. One of the things I really liked is the simplicity of your approach and the fact that it can be applied in virtually any market, as you demonstrated. It was also interesting to see how effective the 20-period moving average is in helping with your trade decision, especially when deciding that it's when to stay in a trade a little bit longer for larger gains. I also want to thank you for the special offer that you put together for our members on your December 5th trading session, which has been discounted to $97, folks. That's a $691 value, discounted to $97, and it includes added support and resistance levels that can improve accuracy by up to 30%, some Fibonacci tools that you'll find interesting, 4 additional setups, and a 30-day membership to the pro service. So I think the folks, once again, at TradingWins have put together a great offer here. And once again, Vince, thank you for the time and the energy that you took in sharing with us what appears to me to be a very, very interesting and straightforward way to trade the markets. And I hope people take advantage of the offer that you have. Once again, folks, that's a special session that will be held on Friday, December 5th.